Thank you. Morning. I'd like to call the meeting to order and acknowledge that we're in Treaty 1 territory, the home and traditional lands of the Anishinaabe, Innu, and Dakota peoples, and in the national homeland of the Red River Métis. Our drinking water comes from Shoal Lake 40 First Nation in Treaty 3 territory. We'll introduce the members of the panel today. Via Zoom is Mr. Harvey Diamond and Mr. Ron Merritt. My name is Stu McPherson. I'll be chairing the meeting this morning. Representing the assessment department is Ms. Sharon Tang, and the administrative personnel today is Ms. Fran Picoto. We'll be hearing applications for revision of the assessment rule in accordance with the Municipal Assessment Act. The matters for which revision is requested has been described in each application. We'll limit discussion to those matters. The statements that are made at this hearing are sworn testimony. Anyone speaking to the matters must be sworn in. Please be advised that comparisons of assessments of properties are not considered evidence of market value by the Board of Revision. The Board of Revision is appointed annually by Council. It's independent of it and the City Administration. It makes its decisions on the basis of the evidence provided at this hearing and issues a written order that will be mailed to all parties as soon as possible. Please note the Board's decisions with respect to an application may be appealed to the Manitoba Municipal Board if the matter pertains to assessed value or classification, or to the Court of King's Bench if the matter pertains to the application of exemption from taxation. Should you wish to appeal, information on how to do so will be included with the Board's order. With respect to the hearing process, I'll confirm the points of appeal with the property to be addressed with each applicant following the swearing in. We'll then have the assessor's testimony followed by questions the applicant may have, and then the applicant's testimony followed by questions. Each side will have an opportunity to summarize if they so wish. Once all the evidence about an application has been brought forward, the applicant may leave and the process will repeat for each item on the docket today. Session will close after all the applications have been heard, and the Board will deliberate in private and make its decisions. You'll receive the Board's decision by registered mail as soon as possible. Just as information, all public hearings are live streamed, recorded, and will be part of the public record. We'll be hearing items number 1 through 7 on our docket today. Ms. Picoto, would you please affirm the assessors and the applicant's testimony?
Madam Assessor, please state your full name.
Sharon Tang.
Do you affirm that the evidence you're about to give at this hearing is the truth, the whole truth, and nothing but the truth?
I do.
Thank you. Ms. Applicant, please state your full name.
Barricades.
Do you affirm that the evidence you're about to give at this hearing is the truth, the whole truth, and nothing but the truth?
Yes.
Thank you.
Thank you.
Thank you. Morning, Ms. Cates. You're here representing the owners of 7 properties, and it's the amount of the assessed value only that we're dealing with today. Is that correct?
That's correct.
Thank you. We'll hear the items as they're listed on the docket today. So the first one we will deal with is 130 Tuxedo. So Ms. Tang, when you're ready, we'll hear your evidence regarding item number 1, please.
File number is 24-3023. Roll number is 1207-3850500. Address is 130 Tuxedo Avenue. The assessed value for 2025 is $17,465,000. Page 2 of my brief shows the subject property information. So there are 7 buildings on the property, and they range between 1 to 2 stories, and they were built between 1972 to 1977. There are a total of 147 suites and 125 outdoor parking. Page 3 of my brief shows the subject property location and pictures. And page 4 shows that there's no sales history for the subject property. And page 5 of my brief shows that the workup for the value. So there are 2, I guess, class and liabilities. One is a 10G and one is 20G. And the 10G, the total value came up to be $2,376,000, and the 20G came up to be $15,089,000. And page 6 of my pages 6 and 7 of my brief shows the comparable information. And page 8 and 9 shows the CMHC information. I would like to make a correction for the top page of page 8. I didn't realize that there is the difference between, I guess, our zoning versus the CMHC zoning. So the property actually belongs to zone 12, Assiniboine Park, according to CMHC. And the total value for based on zone 12, the weighted average per unit work out to be $1,544.03, and the monthly rent will be $226,973, and the yearly total value will be $2,723,688. And with that, the average monthly rent work out to be about $1,623.71. And the average, the monthly rent work out to be $238,677. And the yearly potential rent, according to CMHC, based on 3 approaches, is $2,864,124. And our model rent work out to be about 83.26% of the CMHC information. On page 10 and 11 of my brief shows the cap rate studies. And that concludes my presentation.
Thank you. Ms. Cates, questions for the assessor?
Yes, thank you. So the subject property as owned by Manitoba Housing would be considered social housing, is that correct?
That's correct.
And if we go to your property description on page 2, it lists 7 buildings, but when looking at the aerial map, there are several more distinct buildings on the site. So are you aware if that would impact the modeled value at all?
I'm sorry, which buildings are you talking about?
So it lists 7 buildings, but when I was looking at the aerial map and counting out the buildings, there's about 13 buildings, like distinct buildings on the site. So I guess the question would be, are you aware if the building count affects the model value?
No, it doesn't.
Okay. So given that the property has 147 row house units, would you agree that that's a large site that would require a significant amount of maintenance?
I agree.
Okay, and then on your income value summary on page 5, does the model account for the fact that the property is social housing, or is it treating it as a market apartment on the lower end of the range?
I believe we do take that into consideration, the fact that it is a social housing into consideration when they generate the model.
You believe, or you know that for a fact?
I don't know for sure, but that's what my understanding was.
Okay. So on page 6 for your rent comps, when looking at comparable 110 Albina, are you aware that the property has individual driveways, garages, and decks that are overlooking the pond?
No, but I also don't put more weight on comparable 1 and 4. I put more weight on comparable 2 and 3.
Okay. So for comparable 2 at 30 Baylor and comparable 3 at 916 Renfrew, based on the gross floor area, these units would appear noticeably larger than the subject property. Is that correct?
That's correct.
And would you agree that larger units would tend to command higher rents?
I guess I'll be looking more at the square footage for the comparables. So for comparable two, it worked out to be about 92 cents per, 92 cents per square foot. And comparable three worked out to be about $1.02 per square foot. And the subject property is $1.34.
So just to come back to the question, do you or don't you agree that larger units would tend to command higher rents?
I guess in general, yes.
Okay. And then page 8, where you have your CMHC data, these are the apartment rents, not the CMHC townhouse rents, correct?
That's correct.
Would you agree that townhouse rents, given that the property is row housing, would probably be more comparable to the subject property?
It might be, but there are not that much information available for the row housing, especially for Zone 12. And also, I do notice that on CMHC information, the row housing properties does have a higher rent compared to regular apartment for the
Okay.
same zoning.
Thank you. That would conclude my questions for this property.
Thank you. Mr. Diamond, questions for the assessor?
Yes, I'm looking at page 6 on your comparable rents, Ms. Tang, and wouldn't you agree that your comparable number 4 seems to be maybe the best comparable insofar as area and everything else?
Comparable 4 actually is a co-op housing, so we don't take that into consideration when we were looking at the comparables. I didn't realize there's a comparable housing a co-op housing when I was looking at the comparables.
Well, you're using it as a comparable though, so it's your evidence.
Right, but like I said, I didn't realize that was.
Okay, because I'm looking at all your comparables, and to me, it seems like it's probably the best from all the information on it.
Right, but like I also mentioned earlier, I don't put any weight on the comparable 4 because it's a co-op housing.
Okay, well, you shouldn't have used it then, but okay, thank you. I have no other questions.
Thank you. Mr. Merritt?
Yes, thank you, Mr. Chairman. This thing, I noticed that there's a shortage in regards to parking spots. There's 147 units, and there's only 125 parking spots. Does that have a bearing in regards to the value to the property?
I'm not too sure. I would assume there will be some kind of impact on the value, but I'm not too sure what kind of impact that will be.
Okay, I thank you. Just one other question. One second for me, okay? No, I think that is it, Mr. Chairman. Thank you.
Thank you.
Sorry.
Just a couple questions for me. I guess staying with that comparable number 4, you said it's a co-op. So you don't consider that to be comparable. What's the difference between a co-op and just MHRC or just a normal apartment, a market apartment block? Why would it not be considered comparable?
I'm not too sure, but I think there's something about the ownership and there's some shares involved in the rent they're paying. So we don't really consider that as a market rent.
I see. And the 10G versus 20G, that's split out because, why is that?
Because the number of units. So basically it just depends on, I guess, the building, how many units is in each building. I believe if it was under 5 units, then that's considered as 10G, and anything over 6 would be considered as 20G.
Thank you. And the capitalization, you said it's 6%, I believe, that you've applied.
That's correct.
And where does that number come in? Where's the 6? Is that on your chart, or is that relying on your cap rate evidence comparables on 11? Where does the 6% come from?
I guess the 6% will be the model generated cap rate information. And I guess we do have the page 11 as a backup to support the 6%.
Okay, thank you.
Mr. Chairman, can I ask one more question? I've got.
You've remembered your question, Mr. Mayor?
Yes, thank you.
Please go ahead.
Ms. Tang, for the subject property, it is all model driven, correct?
That's correct.
Okay. So, but you presented a capitalization recap that has got, these are the material, this is some of the material that was used for the model, correct? It's not specific to the subject property?
That's correct.
Okay. So, like I say, the expenses for this one traditional are running at 54.5, and it spits out an NOI. And like Mr. McPherson agreed, there is a split in regards to class or code for the 10s and the 20s, correct?
That's correct.
All right. I thank you.
Thank you. Ms. Gates, we'll hear your evidence, please.
Thank you. So if you turn to page 2 of my brief, we have a summary of some of the facts of the property, as well as our requested assessment of $15,720,000. If you go to page 4, we have our scope of work. So the property was visited by one of my colleagues, which included an interior and exterior inspection of the property as of May 9th, 2023. You go to page 6, we have the property site maps. So you can see from the aerial photograph all of the buildings on the site, as well as the Google map view showing the location within the neighborhood. And then I have some exterior photographs starting on page 7. If you go to page 9, we have the property description. So the subject property is located on Tuxedo Avenue between its intersections with Edgeland Boulevard and Doncaster Street in the Edgeland area. There are 13 two-story row house buildings, which were built in 1972. The site has 147 units, which are broken down as 39 2-bedrooms, 64 3-bedrooms, 32 4-bedrooms, and 12 5-bedrooms. And there are 125 parking stalls. If you go to page 14, we have the overview of our income approach. So in this case, the property is social housing, meaning it operates on a rent to income basis. So people are paying what they can based on a defined proportion of their income. So in this case, we look to CMHC to get a proper market rent, since the subject property's rents are not deemed to be at market. So we are disputing the assessor's rents. They are a bit high based on what we know about social housing properties. So we've looked to CMHC townhouse rents to get the averages for 2 bedrooms and the 3+ bedroom categories. Now, what we know about the CMHC data is its averages. We don't know the starting and the top end value. So given that the property is social housing, it has low end finishes as well. Social housing units are smaller than market units of similar bedroom counts. Typically, we use a factor of the CMHC rents. So typically when we're looking at it, we might look anywhere from 70% to 80% of CMHC. So given that this property does have larger bedroom suites, I've gone to the higher end of the range we'd look at and taken a factor of 80% of the CMHC rents, which gives us a market gross rent of $2,235,859, which is $1,138 for a 2-bedroom and $1,314 for the 3+ bedroom category. If you go to page 15, we have the vacancy and expense overview. So in terms of the vacancy allowance, these properties don't experience a market vacancy. We've again looked to the market and we have applied 3.4% as assessed. For the expense allowance, what we know of well-managed row house apartments is they, especially of this vintage, is they would typically run in the expense range to the mid 50% to 60% and above. These properties have higher expense ratios than a standard vertical apartment, just given wood frame, multiple building systems to maintain. We would expect a higher expense ratio. So to narrow the issues, we're using the 54.5% of effective gross income, and we're going to capture everything else in the cap rate of the property. But I would suggest that this expense ratio is probably on the lower end of what we would expect for a row house property, especially at this age. Now, if you go to page 16, we have the overview of our cap rates for social housing. So when we're looking at social housing cap rates, given that these properties don't really transact in the market, and when they do, they have other conditions associated, we look to market cap rates and then we make adjustments for risk factors. And that is supported by Richard Bolton, who wrote Valuation and Market Studies for Affordable Housing for the Appraisal Institute. And he talks about several factors that could be used for adjustment, but those factors can be lumped into 4 broad categories, which would include low cost or low quality construction, advanced age, declining or blighted neighborhood, and low income tenancy. So not all of these features would be present at every single property, but each social housing property does have low income tenancy. So if you go to page 18, we have a discussion on this topic, but just to summarize this, the link is that low income tenancy leads to deferred maintenance. These properties do not earn enough operating revenue to cover their operating expenses. So government funding is provided to cover that gap, but the funding is insufficient to cover those items of preventative maintenance and just regular maintenance of key systems that market apartments would be incentivized to provide. So what happens is the issues over time will build up and the severity of issues will build up as these issues aren't addressed. So a case study illustrating this effect is when you look at 185 Smith. This was a Manitoba housing property built in the 70s. Broken water pipe flooded much of the property. It damaged key systems. And even after putting in $3 million into the property, it still wasn't enough for tenants to be able to safely return and move back in. And this is just a symptom of chronic underfunding. These issues don't happen overnight, but this is something that is present across the Manitoba housing portfolio. And we could see how these issues happen when we look at a 2017 news release. They're talking $500 million in deferred maintenance. And then flash forward to 2020, we see that each year they're only able to put $30 million toward these properties. So these issues just continue to build and build over time. Now, if you turn to page 20, for our cap rate for this subject property, we are applying a slightly higher cap rate at 6.25%. Our base cap rate for a property of this age group would be 5.5%, but that will be contemplating a regular market apartment, not a row house that has the scale that this property has. 13 buildings on the site, that's a lot to maintain. And comments from previous about the expense ratio not able to capture all that, that extra risk has to be captured in the cap rate. So we've done a 0.75% adjustment based on construction type, low income tenancy. And I would also suggest, even though I haven't specifically done an adjustment for this, that when you're looking at properties with 4-bedroom, 5-bedroom suites, it would be considered atypical in market housing and not a design that we would typically see. So I think at this point, if I can, if I could just briefly go through our cap rate study, which is the separate document, just to give a bit more insight to our base cap rates. If everyone has that open.
I have it. Do you have it, Mr. Diamond?
I do.
And Mr. Merritt, you have it as well?
Yes, yes, Mr. Chairman.
Thank you.
Okay,
Yes.
thank you. So if you turn to page 2 of the cap rate study, it's an overview of what would be part of the cap rate, but some key takeaways from this would be the quote in the middle that direct capitalization is a method to convert a single year's income expectancy into a value indication. Nowhere in the definition does it state that multiple years of stabilized income and expenses are required. As well, if you look toward the bottom, we know the cap rate is composed of 3 main items: perceived risk, investor expectations for appreciation, and required return of other investment vehicles. Now, if you turn to page 5, in the middle, we have the assessor cap rates. So while most of their cap rates will be between 4.75 to 5.45%, the entirety of the range is 3.5% to 7.95%. So when we're dealing with atypical properties that would carry more risk with them, it wouldn't be unusual to go higher than the 6% range, and their highest cap rate goes well above 7%. If you look to the market reports, this is a summary of what the brokers are saying. So for like a low rise B, which is what we'd be looking at, for the most part, they're saying 5 to 6%, 5 to 5.75. CBRE, although is a bit more optimistic. But again, if they're saying 5.75 to 6% as a top end for a market apartment, then it does make sense to go beyond that when we're dealing with a large scale social housing property. Now, if you go to page 6, there's just some discussion of borrowing costs. But the main takeaway here is that if an investor at the reference date could get a low risk government bond for 4.5%, then using cap rates such as what the assessors provided in their evidence that are below 4.5%, it doesn't make sense why an investor would choose to get into multifamily, which is known to be a moderate to high risk investment, if they could get a low risk government bond. So I would use caution when looking at super low end cap rates for valuing multifamily at our reference date. If you go to page 9, we have an overview of some of the factors that we would consider for adjustment. Not every factor would be relevant for all properties, but some that we'll be looking at today would be building type and construction and durability and quality of income. And then on page 11, we have our cap rate sales. So we have a range starting at 5.26%, going to 7.11%. When we stabilize cap rates, we try to be as consistent as possible with how we value properties, while also taking into account the principle of anticipation. Specifically, we're trying to get into the mind of the purchaser when calculating the cap rates. It's not a matter of simple data entry of purely historical info. You have to look to market information, things that the purchasers would have ought to know that would have impacted their sale price. And that's how we arrived at these cap rates, and we have all of the derivations in the appendix. And that would wrap up my cap rate portion. I'll just go back to the main brief just to wrap up this presentation. So if you go back to the main brief on page 22, we have our valuation workup. So given that this property is a mix of class code 10 and class code 20, I just have the figures combined here, but I'll just read out the individual NOIs that I'm using. So for class code 10, the NOI that I'm using is $133,675. So that's $133,675 with a 6.25% cap rate. And for class code 20, the NOI I'm using is $848,836. So that's $848,836 with a 6.25% cap rate. which brings us to the value of 15,720,000. And just to come back to a couple of the points that I was trying to bring out in questioning, in terms of whether the model is contemplating a distinction between social housing properties and low-end market. Previous responses that I've gotten was always that it was only contemplating low-end market. It was not specifically contemplating social housing. And additionally, there is a separation between the modeling group and the assessment department. So whether number of buildings or other factors are impacting the model, there is some uncertainty. So that would, my appendix starts on page 24. I have included some photographs of the interiors of the suite from the site visit for your review. And the remainder of the appendix would be just further background on some of the social housing cap rates. And that would conclude my presentation on this property. Thank you.
Thank you. Ms. Tang, questions for the applicant?
So on page 14 of your brief, it shows that you're using, I guess, the zone 5 to 12 suburban area for 1,422 for 2-bedroom and 1,643 for 3-bedroom as a reference. So I'm just wondering, from zone 5 to zone 12, which zone would you say is more compatible to zone 12? Because we don't have any information for zone 12. So I guess from zone 5 to zone 11, which zone would you say is more compatible to zone 12?
Yeah, there wasn't specific zone 12 information. That's why I just used the suburban. In terms of areas that might be most comparable, maybe zone 10, zone 11. Yeah,
Okay.
I think that would make sense.
Okay. I guess on page, let's just see here. Sorry, on page 6 of your brief, so that shows the picture of the subject property. So I guess our assessed value is 17,465,000. So that works out to be about 118,000 per unit. Are you aware that the corner unit was being sold for 580,000 for a 1,600 square feet condo?
Corner unit where?
So on the left side. So I guess the corner of the Tuxedo when you're turning on to the Tuxedo, the other side of Tuxedo, I guess. Yes.
Ms. Tang, what year are you referring to?
So I guess if you're looking on page 6, so I guess the very left corner.
No, what year?
Oh, wait,
What
2022.
time frame?
2022.
Well, given that we're not doing a direct comparison approach, I wasn't looking to sales of other different property types for evaluation of this property.
I don't have any echo questions.
Thank you. Mr. Merritt, questions for the applicant?
Thank you, Mr. Chairman. Ms. Cates, you get a chance to inspect this property at all?
I didn't personally inspect it, given that one of my colleagues had inspected it and provided me the notes and the photos.
Okay. So, how did you go about determining rents for the subject property?
So I looked to the CMHC townhouse rents. They didn't have specific rents for the zone that this subject property is in. So what I did is I looked to the suburban rents for 2 bedrooms and 3 bedrooms plus. And from there, I've taken a factor of those rents based on the knowledge that newer developments are going to pull up averages, as well as renovated properties are going to pull up averages. this property is from the 70s. It's also social housing. So based on that, typically we would do a factor of 70% or maybe even a bit lower to 80%. I went to the higher end of the range, given that there are larger bedroom suites in this property. So I feel that the rents I've used encapsulate a proper market rent for this property.
I thank you. I just have a couple more questions. Seeing that none of these Manitoba housing projects have ever sold, how can you put a cap rate on something that is probably not in existence for determining the cap rate?
Yeah, and that's part of the challenge with the Manitoba housing properties is that they don't transact. So we've looked to market information in terms of what the Appraisal Institute has put out in terms of how to approach valuing these properties, as well as prior board decisions in terms of how to value these properties. And what the Appraisal Institute suggests is that you should start at a market rate and then make adjustments for risk factors that are present at the property. So that's what we've done here. We've started at our market rate of 5.5% and made adjustments upward for the risk factors that are present. But it is a bit of a theoretical analysis, given, as you mentioned, that these properties don't really transact. And when they do, they tend to have a lot of atypical conditions associated with them.
All right. So just a couple more questions. The city's at 6%, and you're at 6.25%. So you feel as if the Manitoba housing would warrant the 0.25% higher cap rate?
Yes, I do. Because when we look at market information as well, they would suggest 6% even for market apartments. And this is a social housing project. We don't see properties like this built in the market. And so it would carry a higher risk profile than what a market apartment would carry. As well, the other factor of the risk to consider is that given that these properties are rent geared to income, they may only be getting $200, $300 per suite. So when we're kicking up that rent to do a proper market analysis, there is a risk of whether they'll be able to make that jump because there's no evidence that they can achieve those higher rents. So from our perspective, social housing properties carry a higher risk profile and they should have a higher cap rate than what market apartments would likely carry.
All right, I thank you. My final one is there's a split in these properties, and you've given us the NOIs and the cap rate. I think I'd like to see if the city presented the split. I think you should do that next time too. Okay, so I
Yes.
mean we have enough stuff to calculate, so the figures would be amply appreciated.
Yes, noted.
Okay, I thank you, Mr. Chairman.
Thank you. Mr. Diamond.
Yes, Ms. Gates, I'm also looking at the cap rate. And at first glance, it seems like the assessment department's model of cap rate of 6% seems very generous, and you're asking for 6.25. Would you agree that it's a pretty large parcel of land?
It is a large parcel of land, I agree.
And would you agree that it's in a pretty desirable area?
Yes, I agree. Location isn't a factor here.
No, and so that a developer or somebody purchasing it, looking at the area, would that not influence a lower cap rate?
I don't believe so. I do see the point that it's a desirable area and it would be desirable to developers. But when we're valuing this property, we're doing an income approach. We haven't attempted a cost approach to see the land value minus the demolition. So for that reason, we have to value the improvements that are on the site. So I think the cap rate that goes with those improvements makes the most sense just from an income approach basis.
Well, somebody buying the property, though, knowing the area, knowing that it had further potential, that would not influence the cap rate, in your opinion?
Not for the improvements that are on the site. But
That's not the question I asked you. I asked you, knowing the area, knowing it's a big parcel of land, and knowing the area, would that not influence the cap rate on somebody interested in purchasing the property?
like I don't know how exactly to approach the question. I mean, we're valuing it like it's social housing. I
Okay,
agree.
you're not answering the
It's
question.
good.
That's fine. You're not answering the question, and if that's it. I don't get an answer. I'll accept that. And like Mr. Merritt said, it would be nice if you did apportion your NOIs between the classes of 10 and 20, because
Yes,
it does give us extra work when we have to formulate our decisions if we don't go with what the assistant department has given us already, which is apportioned.
yes, for sure.
Okay, thank you. That's my questions.
Thank you. I'd just like a little clarification on the rents that you've applied. You said 80% of market, and I think your statement was it's 70 to 80 usually, but because these are larger, it's 80. But where does that figure come from?
Like using the 80%, like where
Yes.
does that come from?
Right.
Well, there's a bit of subjectivity to it. What I'm trying to get at is the lower end of the market rents, because what we have to work with is averages. So that's how we come to the 70 to 80%, is to try to get at those lower end rents. But there is a bit of subjectivity as to what that appropriate number is, for sure.
Okay, then would that not overlap in the application of the cap rate too? You've already adjusted the rent. So would that not be considered an adjustment that's already been made to a cap rate?
So in terms of the information that we look at to make our adjustments, those prior board orders suggest that a lower end rent, along with potentially even a higher vacancy, higher expenses, and still a higher cap rate would be warranted to reflect the risk. The rents are reflecting the finishes and the size. So I don't believe it's double counting in this case.
All right, I thank you. Ms. Tang, desire for a summation on this property.
No, I'm fine, thanks.
Ms. Skates?
No, thank you.
Okay, thank you. Then that will conclude this matter. So we can move on to the next item on our docket, which is 553 Kylemore. When you're ready, Ms. Assessor, we'll hear your evidence, please.
File number is 24-3039. Roll number is 120-111-71500. Address is 553 Kylemore Avenue. The assessed value for 2025 is $961,000. Page 2 of my brief shows the subject property information and pictures. So there are 4 stories on the property, and they're 2-story tall, and they were built in 1978. There are 8 suites and 8 outdoor parking. Page 4 shows that there was no sale history for the subject property. And page 5 of my brief shows the workup for the value. So there are 8 3-bedrooms, and they're classified as 10G. And the potential rent we assigned for the subject property is $1,118.22. And that gives, and then we use a 3.2% vacancy rate and 56.08% expense ratio. And that gives us a net operating income of $45,639. And then we use a 4.75% cap rate, and that gives us $961,000. On page 6 and 7, my brief shows the comparable information. And page 8 of my brief, so it shows the CMHC information. And again, on the top chart, so the subject property should be considered as Zone 1 according to CMHC. So there'll be a Fort Rogue, and that will change the net of the yearly total potential rent to be $161,760, and the overall I guess the overall annual potential rent with the three approaches would be $153,408, and that so the model rent is equivalent to about 69.98% of the CMHC value. And page 10 and 11 of my brief shows the cap rate study, and that's my presentation.
Thank you. Ms. Cates, questions for the assessor?
Just a few, thank you. So for your cap rate table, on page 10. So in looking at the cap rate range, can you provide any information on the sales that are being used, such as the location of the properties or the type?
Sorry, for page 10 of my brief?
Yeah, for page 10, 4.75 to 5.45, like the general ranges. Just wondering if you had any information on how many sales, where they were located, et cetera.
I guess it'll be on page 11 that will be providing more information.
Okay, but I'm on page 10. So on page 10, can you provide any information on those?
Oh, I'm just saying that our page 10 information will be based on page 11 sales.
But to clarify, page 11 isn't the entirety of the sales that are included in the ranges for page 10.
Right.
Okay. So the broker cap rates are stated to further support the assessment department cap rates. Is that correct?
That's correct.
So in looking at the subject, which would probably be considered a low-rise B or potentially even lower than that, do you agree the brokers are suggesting 5% as the minimum?
That's correct.
So given that the property is a 4.75%, based on the market information, do you feel that that's not too low for the subject property?
I guess when we're generating the cap rate, we don't just look at the third party information. We're also looking at the information that's provided to us from the sellers. So we do have the information on page 11 that supports the information, and then we do some adjustments because it's the social housing.
Okay, and then, so on page 11, your sales, you haven't provided any workups for those sales, is that correct?
That's correct.
Okay, thank you. That would conclude my questions, and I also have some rebuttal.
Okay, thank you. Mr. Dime, questions for the assessor?
Yeah, the cap rate, Ms. Tang, why would the model pick a 4.75 cap rate? It seems to be at the bottom. That would put this property at 20 percentile level, which me appears maybe like it might be a little bit low. Why would the model pick 4.75 for this property?
I'm not too sure. I guess we'll be looking at the page 11 to have some sales that supports the 3.46 or 3.6% cap rate. But I'm not too sure how the model generate the 4.75% cap rate.
Okay. Okay, thank you. That's my only question.
Thank you. Mr. Merritt?
I have none, Mr. Chairman. Thank you.
Just have a couple. Did you say that the rents represent 69% of the market?
Of the CMHC, yeah, that's correct.
And the expense ratio is 56.08%?
That's correct.
Is it due to age or the suite mix? They're all 3 bedrooms, or what would justify a high expense ratio such as that?
I guess we'll be looking at the market information in the area, and the model will generate the expense ratio based on the age and type of the property. So we'll be collecting the income and expense information from the owner every year, and based on that, we would assign the expense ratio on the property type and the year built.
Okay. So are you suggesting that properties from 1978 have a higher expense ratio than older or newer properties?
I'm sorry, what was the question again?
Well, I thought your answer to the previous one was it was based on the age of properties in the area.
Right.
So 1978 is the age of this property.
That's
So
correct.
you're saying that that's what it's suggesting is 56% for something in that age vintage?
Yeah, in the area, for this area, that's correct.
Okay, thank you. Ms. Gates, we'll hear from you, please.
Would that be my main presentation or my rebuttal?
We'll hear your main presentation first.
Okay. So if you turn to page 2 of my brief, I have our requested assessment of $761,000. If you go to page 6, you could see the property site maps and the overview of its location. And then on page 7, we have some exterior photographs of the subject property from the front and the back. On page 9, we have our property description. So the subject property is located on the north side of Kylemore Avenue at its intersection with Nassau Street South in the Lord Roberts area. The property consists of 4 two-story row house buildings built in the late 70s. It has 8 units, which are all 3 bedrooms, and there are also 8 surface parking stalls noted. If you turn to page 14, we have the overview of our income approach. So we're not disputing the NOI, and the rents are getting to the point of what I was trying to make with the prior property, which they should be a factor of market rents at about 75%. So we think that the rents in this case make sense. We've applied market vacancy as well as market expense allowance. On page 15, we have the overview of our cap rates for social housing. I would just ask that all my comments from the prior property carry through to this property and the remaining ones on the docket. They're all social housing properties. So if you turn to page 19, we have the overview of our cap rate for the subject property. We are disputing a cap rate of 4.75%. We feel this is far too low for a multi-building social housing property, and to maintain 4.75% when the market suggests 5% minimum, this would be to suggest that this property is one of the best investments in the city. So we're applying a 6% cap rate. We started a 5.5% base cap rate, and we've applied a 0.5% risk premium to account for the construction type, low quality construction, as well as the social housing element. If you turn to page 21, we have our valuation workup. So we're using an NOI of $45,639 with a 6% cap rate. That gives us a rounded value of $761,000. And the appendix starts on page 23 and similar documents to the last time surrounding social housing. That would conclude my presentation on this property. Thank you.
Thank you. So you want to enter the cap rate study as evidence for this property as well, is that correct?
Yes, I would.
With your same statements?
Yeah.
Normally there are individual hearings and it should be discussed on each one. In this case, being a single owner of all the properties, we will accept the evidence as it was entered previously. So We will note that the cap rate study is also applicable to this property. Ms. Tang, questions for the applicant?
I don't have any questions.
Mr. Merritt?
No, thank you, Mr. Chairman.
Thank you. Mr. Diamond?
Yes, Ms. Cates, again, this area would be a pretty desirable area. Would you agree?
I would agree, it's a good location.
And the properties themselves, from the photographs, seem to be well maintained, at least on the outside. We haven't. I'm looking at your outside photographs.
Yes, they're maintained. I haven't inspected the interiors. But yeah, Manitoba Housing would try to keep the properties in as well of shape as possible. So yeah, I agree. The exteriors look well.
And there seems to be quite a bit of green area. I'm looking at your photograph on page 7.
Yeah, toward the sides and the front, I would say.
And would that not have an influence on the cap rate?
In our view, like we treat social housing properties based on the information we have. I've not accounted for any type of location adjustments. I agree the location is good, but I'm confident in the cap rates that we've submitted here today.
Okay, thank you very much.
Thank you. I just had the one question, the suite size. Is this smaller than normal, these suites?
I haven't looked at the suite size per unit specifically, but based on what we know about social housing properties, they typically are smaller than what the market counterparts would be, just given that they're trying to house people as efficiently as possible. So yeah, I wouldn't consider the suite size to be a negative detriment or anything like that. But they typically are smaller.
I see. So I think you had made a statement that it's usually 70 to 80% of market that or CMHC rents that you apply. Is that correct? 70 to 80?
Yeah, like if we're straying from the modeled income, then we'll use 70 to 80% typically. But if the model is coming in at 60 to 8%, then to me that's what we're trying to get at anyway, is the lower end of the market rents.
Okay, I thank you. You have some rebuttal evidence?
Yeah.
Mr. Chair, if I may, I'm just having some technical difficulties. Would we be able to take a short recess to address those?
Yes, how long will you need?
Just 2 to 5 minutes most.
Okay, that's coming up on 10 o'clock, so let's make it 10 after 10. That will reconvene. So I will call a recess here.
Okay, thank you.
Thank you. I'll call the meeting back to order. We're still on item number 2553 Kylemore, and the applicant has some rebuttal evidence to present. Ms. Tang, do you have the rebuttal evidence?
Yes, I do.
Thank you. Ms. Gates, when you're ready, you may proceed.
Thank you. So if you turn to page 2, we have an overview of the assessor's cap rate sales. They're suggesting a range of 3.46% to 5.74%. And I would just echo previous comments that cap rates below 4.5% shouldn't really be relied upon and should be viewed with a degree of skepticism. So if you go to page 4, we note that 727 Sargent and 241 Young are 2 of these newer sales that they're using that are unusually low. Additionally, they haven't included an income approach or any supporting data to show how they're arriving at their cap rates. And I would suggest that when we're seeing cap rates this low, it typically speaks to an improperly stabilized income stream, that the purchaser was purchasing a different opportunity than what was historically in place. So 459 Sargent, the city cap rate sale number 2. When we look to MLS, they're advertising average monthly rent of $740 per month, plus parking rent of $40 per stall. So we've restabilized this cap rate based on the income stream that the purchaser would expect to achieve. So when we restabilize, we get a cap rate of 5.79%. So page 5 has that valuation workup. So the city had provided the income and expense data based on previous rebuttals. So that's where we got the expense data. And when we restabilize with the income, we get the higher cap rate, 5.79%. And that's what the purchaser, that's the information they had available to them. That's what they would have expected to achieve. If you go to page 7, we've also restabilized 150 Hendon. So for this property, although no stabilization has been provided, presumably the city is using the historical income to calculate the cap rate. Now, we were able to interview the purchaser, and at the time of sale, they were advised by the vendor that the vendor had done some renos, had applied for above guideline rent increases. And so that is the income stream they would have expected to attain. So when we look at what they state as a gross potential in 2021, keeping in mind they purchased this property mid-21, at the end of the year, they stated a gross potential of 712,182. And then we see in 2022 that they actually did achieve that. So when you recalculate the cap rate, it becomes 5.42% compared to 4.01%. And we've provided the stabilization on page 8, as well as the backup documentation starting on page 9. So the RTV information and some sample RTV orders, as well as the other financials that we've looked at. So if you go to page 22, skipping ahead, city cap rate sale number 6, 203 Woodlawn. Per the sales questionnaire, this was a related sale, so a sale between family members. So given that it's not a market transaction, it really shouldn't be used in a cap rate study. So I've included the sales questionnaire form below that. On page 23, we note the city is using the older sale for 677 Maryland. Given that the market has changed and there is a newer sale available, it's really not accurate to be using the 2020 sale when there is a more recent sale based on more recent market conditions available. So we have this cap rate in our own cap rate study at a 7.11%. 2390 McPhillips, this property was purchased by a REIT with below market rents. They would have known that based on their experience with the market as well as CMHC information that the rents were below market. So again, they were purchasing a different opportunity. There was topside potential on this property. So when we use those market rents, we get a cap rate of 5.59%. And then we've also included some information on some of the other sales from last cycle. So 700 St. Mary's indicated intent to renovate. And then on page 25, we also have 32 Arden where there was intention to renovate, though this one was also an older sale. So I'd also put less weight on that given that it was in 2019. And then the rest is just documentation. Page 29, we've included the municipal court order on intention to renovate in terms of use and cap rate studies. And that would conclude my rebuttal presentation. Thank you.
Thank you. Ms. Tang, questions regarding the rebuttal?
So I guess from my understanding is that most of the cap rate studies in this evidence are based on, I guess, a hypothetical rent.
No, I don't agree with that. A lot of real estate valuation, when you're looking at cap rate sales, you have to look forward, principle of anticipation, what would they expect to get? So it's not a hypothetical to look at broker information in terms of, or vendor information about what the rents could be.
I don't have any other questions.
Thank you. Mr. Diamond?
I have no questions. Thank you, Mr. Chair.
Mr. Merritt?
No, thank you, Mr. McPherson.
No, I have no questions. Thank you. Desire for a summation on this property, Ms. Tang?
No, thank you.
Ms. Gates?
No, I'm good also. Can I just request that the rebuttal information be carried through to the other properties?
Yes,
Thank you.
thank you. That will conclude this matter. And move on to item number 3 on our docket, 41 Taft. When you're ready, Ms. Assessor, we'll hear from you, please.
File number is 24-3017. Roll number is 1201110500. Address is 41 Taft Crescent. The assessed value for 2025 is $1,134,000. Page 2 and 3 of my brief shows the subject property information. So there are 3 buildings on the property, and they range between 1 to 2 stories. And the buildings were built in 1976. There are 9 suites and 9 outdoor parkings. And page 4 of my brief shows that there's no sales history for the subject property. And page 5 of my brief shows that shows the workup for the value. So it's split between 10G and 20G again. We assigned an average of $1,088.83 for the rent, and that gives a final valuation of a final valuation of $1,134,000 for both class and classifications. And page 6 of my brief shows the comparables. And page 7 of my brief shows the 7 and 8 and my brief shows the CMHC information. And again, the property is actually supposed to be considered as Zone 1 according to CMHC. So that would give us a monthly rent of $15,165. And based on 3 approaches, the final value for the yearly potential rent will be the final model rent will be 68.14% of the CMHC information. On page 9 and 10 of my brief, 9 of my brief shows the cap rate study, and that's my presentation.
Thank you. Ms. Gates, questions for the assessor?
Yes. So on your income value summary on page 5, the subject cap rate at 4.6%, that would be below the 20th percentile. Is that correct?
That's correct.
Okay, thank you. That will conclude my new questions.
Thank you. Mr. Merritt?
I have none, Mr. Chairman. Thank you.
Mr. Diamond?
I have no questions either. Thank you, Mr. Chairman.
I have nothing further. This is all market driven, correct?
That's correct.
Model driven, I meant.
Yeah, that's correct.
Thank you. Ms. Gates, we'll hear from you, please.
Okay, thank you. So if you turn to page 2, we have our requested assessment of $907,000. On page 4, the scope of work, I did do an exterior inspection to get some exterior photographs in preparation for the brief. September 23rd, 2024. So if you go to page 6, we have the property map and aerial view of the subject site, and then some exterior photos on page 7. So I did take these. On page 9, we have the property description. So the subject property is located on Taft Crescent between Daly Street South and Nassau Street South in the Lord Roberts area. The property consists of 3 row house buildings built in the mid-70s. There are 9 units, which include 1 2-bedroom, 5 3-bedrooms, 2 4-bedrooms, and 1 5-bedroom. And there is surface parking located at the back of the property. So if you turn to page 14, we have the overview of our income approach. The NOI is not in dispute. On page 15, we have the discussion on cap rates for social housing. That carries through to page 18. On page 19, we have the cap rate for the subject property. So we are disputing the cap rate of 4.60%. We're using a cap rate of 5.75%. So our base cap rate, assuming good quality properties in good locations, is 5.5%. And I've done just a modest adjustment here to 5.75%. The reason being is based on my exterior inspection and some research into the property, we can see that this property has had some exterior work done. So to reflect that they have put some capital in, we've gone with a lower cap rate as well to be consistent with the cap rate application throughout this docket. So if you go to page 21, we have our valuation workup. So this property is a split 10-20. So I apologize for not providing the breakdown, but just to read it in, we're using an NOI for class code 10 of 23,186 with a 5.75% cap rate. And then for class code 20, we're using an NOI of 28,982 with a 5.75% cap rate. That gives a rounded value of 907,000. And that would conclude my presentation on this property. Thank you.
Thank you. And it's your cap rate study as well as a rebuttal that's being presented
Yes.
previously. So the rebuttal evidence will be for this property, the last property, and this property throughout, but not for the first property, because that was not presented for that property.
Yeah. Yes, I figured the first property, there wasn't that much of a dispute on the cap rate. So yeah, I thought it made more sense just to present it for the bigger disputes.
Thank you. Ms. Tang, questions for the applicant?
I guess just one. So I guess if I understanding correctly, so I guess the cap rate you were asking for 5.75 is simply based on the fact that there was some sort of renovation on the property. Does the I guess the year built or any other factors impacting the 5.75?
So typically when we're looking at social housing properties, especially from this era, like the 70s, we would typically be at least a 6% cap rate. But given some of the exterior work, I thought it made more sense to go a bit less of an adjustment, so go to 5.75%. But I think the other factors would still remain the same. I mean, regardless of what type of work you do, the property was still built when it was built. Yeah.
Okay, no further questions.
Thank you. Mr. Merrick, questions?
Yeah, there's just a split on the property also, so we can determine that, I guess.
Pardon? Sorry, it's the sound isn't that strong in here.
Okay. I just said that there's another split. There's a 10 and there's a 20, so we can do the numbers though.
Okay.
Thank you. Mr. Diamond?
No questions. Thank you, Mr. Chair.
And I have no questions. Thank you. Desire for summation, Ms. Tang?
No, thank you.
Ms. Gates?
I'm good as well. Thank you.
Thank you. We'll conclude this matter. We'll move on to the next item on our docket, which is item number 460 West Grove. When you're ready, Ms. Assessor, we'll hear from you, please.
File number is 24-3026. Row number is 010047040100. Address is 60 West Grove Way. The assessed value for the property for 2025 is $6,928,000. Page 2 and 3 of my brief shows the subject property pictures. So there are 10 buildings on the property and they're 2 stories high, and they were built in 1972. There are 52 suites and 43 outdoor parking. Page 4 of my brief shows that there's no sales history for the subject property. And page 5 of my brief shows the workup for the value. So we assigned a monthly rent of $1,348.26, and that gives us a total value. And then we use a 3.4% vacancy rate, 53.54% expense ratio, 5.45% cap rate, and that gives us a $6,928,000. And page 6 of my brief shows the subject property comparables. And page 7 and 8 of my brief shows the CMHC information. And again, this property should be zone 12 according to CMHC. And that will give us a total monthly rent of $69,532. And the yearly total income will be $834,384. And based on the 3 approaches on page 8, the yearly potential rent should have been $948,722, which the model represents 88.68% of the CMHC rent. And page 9 and 10 of my brief shows the cap rate studies. And that's my presentation.
Thank you. Ms. Gates, questions for the assessor?
No, thank you.
Mr. Diamond?
No questions, thank you.
Mr. Merritt?
No, thank you, Mr. McPherson.
I have no questions. Ms. Gates, we'll hear from you, please.
Okay, thank you. So if you turn to page 2, we have our requested assessment of $5,692,000. On page 4, for the scope of work, I did visit the property and did an interior and exterior inspection on December 8th, 2023. On page 6, we have our aerial view and property site map, and then some exterior photographs on page 7. On page 8, we have our property description. So the subject property is located on West Grove Way, west of Dale Boulevard. There are 10 2-story row house buildings on the site, which were built in the early 70s. There are 52 units, which include 13 2-bedrooms, 28 3-bedrooms, and 11 4-bedrooms, and there are 43 surface parking stalls noted. If you turn to page 13, we have the overview of our income approach. So I've applied the same rent methodology as for Tuxedo, 80% of the CMHC rents, which based on some of the other properties that we've seen, 80% is fairly reasonable. We could have gone even a bit lower on these, but I feel that 80% of the townhouse rents is a good reflection of an appropriate market rent for the subject property. So those rents are then $11.38 a unit for the 2-bedrooms and $13.14 for the 3 and 4 bedrooms. On page 14, we're using 3.4% vacancy based on market rates and an expense ratio of 53.5%. On page 15, we have the overview of cap rates for social housing. So previous commentary would carry through to this property as well. Our cap rate study presented previously would carry through to this property. So if you go to page 19, we have our cap rate approach for the subject property. So We are disputing 5.45%. We are using 6.25% based on similar logic to the first property that we dealt with. Same base cap rate based on the year built, but it is a larger site. Social housing, there's no amenities. So based on that, we're doing an adjustment to 6.25%. On page 21, we have our income and expense breakdown. So the class code 10 NOI that I'm using is $54,727. So that's 54,727. And then the class code 20 NOI is $300,997. So that's 300,997. Both of those with a 6.25% cap rate. And the total value would be $5,692,000 rounded. The appendix starts on page 23, and I've included some interior photographs of the suites that were visited, kind of a sampling. So there's occupied unit and a vacant unit in there for your review. And that would conclude my presentation on this property. Thank you.
Thank you. Ms. Tang, questions for the applicant?
I don't have any questions.
Mr. Diamond?
I don't have any questions, Mr. Chair.
Mr. Merritt?
Just one, Ms. Cates, once again, we have the split, so we'll do the numbers for it.
Okay.
Okay, thank you.
Sorry, Ms. Cates, did you not provide the split in your narrative?
Yeah, I verbally read in the NOIs, but they're not in print, I guess. So
Would
yeah,
you
loaded for next time.
would you give us those again, please?
Yeah. So class code 10 NOI, 54,727. So 54,727. Class code 20 NOI, 300,997. So $300,997.
Thank you. And then that totals up to what you've presented here.
Yeah.
Thank you. Just the cap rate, did you mention that there's been some improvements on this property or not?
Well, in terms of my site visit, the interiors of the condition, like the photos that I provided are based on what the property manager told me. They're pretty well representative of the property. So there hasn't been any major work that I'm aware of, but I would say like there's no issues with the condition of the interiors. They are basic, but there isn't any damage or anything like that. So that's based on what I was, we saw a sampling of units, but I was told that those are reflective of the property.
Thank you. Ms. Tang, desire for summation.
No, I'm fine, thanks.
Thank you. Ms. Gates?
I'm good as well, thank you.
Thank you. That will conclude this item. We can move on to item number 5, which is 43 Killarney. When you're ready, we'll hear from you, please, Ms. Tang.
File number is 24-303H. Roll number is 030423851000. Address is 43 Killarney Avenue. The assessed value for 2025 is $2,226,000. Page 2 of my brief shows the subject property pictures and information. So there are 2 buildings on the property. It was built in 1977. The effective year built is 1982 due to some exterior work and window replacement. There are 18 suites and 22 outdoor parkings. Page 4 of my brief shows that there's no sales history for the subject property. Page 5 of my brief shows the workup for the value. So there are 18 3-bedroom units, and we assigned a monthly rent of $1,176.31. Then we use a 3.1% vacancy rate, 57.05% expense ratio, and 4.75% cap rate, and that gives us $2,226,000. And page 6 of my brief shows the comparable rent, and page 7 and 8 of my brief shows the CMHC information. And we can see that the model rent is about 73.31% of the CMHC rent. And page 9 and 10 of my brief shows the cap rate study, and that's my presentation.
Thank you. Ms. Gates, questions for the assessor?
No questions, thank you.
Mr. Diamond,
No questions. Thank you, Mr. Chair.
Mr. Merritt?
No, thank you, Mr. Chair.
I just have one. You said 1977 is the original year built. 1982 was varied because of window replacement. Is that?
There's also exterior replacement as well. I think my understanding was that initially there was a vinyl siding, and then when they replaced it, they changed to stucco and windows as well.
And does the effective age, does that affect the cap rate that's applied?
Yeah, so the cap rate is based on the 1982 effective year built instead of 1977.
And does that make a difference according to the model?
I believe so, yes.
Thank you. Ms. Gates, you're ready. We'll hear from you, please.
Okay, thank you. So if you turn to page 2, we have our requested assessment of $1,762,000. On page 6, we have our property site maps. Have some exterior photographs starting on page 7. So there's 2 different buildings on the site, so I've labeled those in the photographs. Page 9, we have our property description. So the subject property is located on Killarney Avenue, east of Pembina in Fort Richmond. There are 2 two-story row house buildings built in 1977. There are 18 units, which are all 3 bedrooms, and there are 22 parking stalls noted. On page 14, we have our income approach. We're not disputing the NOI in this case. We have our cap rates for social housing starting on page 15. And I would also ask that my presentation on the cap rate study apply to this property as well.
Thank you.
On page 19, we are disputing the cap rate in place of 4.75%. We're applying a cap rate of 6%. Our base cap rate would start at a 5.5%, and we're applying a 0.5% premium to account for construction type social housing. And when you look at those exterior photos, any work that's been done has been capital work that's been done a while ago. There isn't anything really standing out as super modern or renovated from those exterior photos there. If you go to page 21, we have our income and expense breakdown. So we're using an NOI of $105,745 with a 6% cap rate, gives us an indicated value of $1,762,000 rounded. And that would conclude my presentation on this property. Thank you.
Thank you. And your previous rebuttal evidence is also applicable here, is that correct?
Yes, thank you.
Thank you. Ms. Tang, questions for the applicant?
Yes, just one. Would you consider the subject property in a good location?
Yeah, I would say with this property and with the other properties we dealt with it, well, like location isn't an issue. So our base cap rates account for good quality property and good location. So yeah, I wouldn't put any type of downward adjustment for location or anything like that.
Okay, no questions.
Thank you. Mr. Merritt,
I have none, Mr. Chairman. Thank you.
Mr. Diamond,
No questions. Thank you, Mr. Chair.
and I have no questions. Desire for summation, Ms. Tang,
No, thank you.
Ms. Gates?
I'm good as well, thank you.
Thank you. That will conclude that matter. Is everyone okay to continue through, or does anyone need a short break at this time?
I'm fine.
I'm okay.
I'm fine.
Everyone's fine. Thank you. We'll continue through then. Number 6, 150 Dalhousie. When you're ready, Ms. Tang, we'll hear from you, please.
File number is 24-3245. Roll number is 0304385410. Address is 150 Dalhousie Drive. The assessed value for 2025 is $1,633,000. Page 2 and 3 of my brief shows the subject property pictures. So there are 2 buildings on the property, and they're 2 stories. They were built in 1975. There are 14 suites and 14 outdoor parkings. Page 4 of my brief shows that there's no sales history for the subject property. Page 5 of my brief shows the workup for the value. So there are 14 3-bedrooms, and we assign a monthly rent of $1,094.68. Then we use a 3.1% vacancy rate, 56.48% expense ratio, and a 4.75% cap rate. And that gives us $1,633,000. Page 6 and 7 of my brief shows the comparable rent, and page 8 and 9 of my brief shows the CMHC information, and we can see that the model rent is about 68.22% of the CMHC rent. Page 10 and 11, my brief shows the cap rate study, and that's my presentation.
Thank you. Ms. Gates, questions for the assessor?
No questions, thank you.
Mr. Diamond,
No questions. Thank you, Mr. Chair.
Mr. Merritt,
None from me. Thank you.
and I have no questions. Ms. Gates, we'll hear from you, please.
Thank you. So if you turn to page 2, we have our requested assessment of $1,293,000. On page 6, we have our property maps, and then some exterior photographs starting on page 7 of the 2 different buildings on the site. Property description on page 9. So the subject property is located on Dalhousie Drive, east of Pembina, in Fort Richmond. Property consists of 2 2-story row house buildings built in the mid-70s. There are 14 units, which are all 3 bedrooms, and there are 14 surface parking stalls noted. We have the overview of our income approach on page 14. The NOI is not in dispute. We are disputing the cap rate. So if you turn to page 19, we have our subject cap rate information. So we are disputing 4.75%. We're applying 6% similarly to the prior property based on construction type and low income tenancy related to social housing. So we're applying a 0.5% premium to our cap rate. If you turn to page 21, we have our income and expense breakdown. So we're using an NOI of $77,555 with a 6% cap rate. That gives a rounded value of $1,293,000. And that would conclude my presentation on this property. And I would just ask that my cap rate study information, social housing cap rate information, and rebuttal just all be carried through to this file as well. Thank you.
Thank you. Ms. Tang, questions for the applicant?
No questions.
Mr. Merritt,
I have none. Thank you, Mr. Chairman.
Mr. Diamond.
No questions, thank you, Mr. Chairman.
I have no questions. That will conclude this matter. Item number 7, 86 Ulster. When you're ready, Ms. Assessor, we'll hear from you, please.
File number is 24-3024. Roll number is 030438360000. Address is 86 Oster Street. The assessed value for 2025 is $759,000. Page 2 and 3 of my brief shows the subject property photos. So there is one building with the 2 stories. It was built in 1988. There are 6 suites and 6 outdoor parkings. And page 4 shows there's no sales history for the subject property. Page 5 shows the workup. So there are 6 3-bedrooms. We assign monthly rent of $1,088.12. We use a 3.1% vacancy, 55.99% expense ratio, and a 4.4% cap rate, and that gives us $759,000. And page 6 shows the rent comparable. Page 7 and 8 shows the CMHC information, and it shows that the model rent is about 67.81% of the CMHC rent. And page 9 and 10 shows the cap rate study. And that's my presentation.
Thank you. Ms. Gates, questions for the assessor?
Yes, so on your income value summary on page 5, 4.4% cap rate for social housing, does that strike you as being on the low end?
It is, but I guess given the size of the property, since it only has 6 suites, so I guess the model does believe the 4.4% is reasonable.
Okay, thank you.
Thank you. Mr. Diamond.
No questions, thank you.
Mr. Merritt?
I have none, Mr. Chairman.
Thank you. So the cap rate of 4.4%, that's model derived,
That's correct.
and that would be based on the age and the area primarily, or
Yeah, and the size of the property as well.
the size of the property being the site itself or the units?
It'll be both, I guess.
Thank you. Ms. Gates, we'll hear from you, please.
Thank you. So if you turn to page 2, we have our requested assessment of $581,000. On page 6, we have our property site maps and some exterior photographs on page 7. On page 9, we have our property description. So the subject property is located to the east of Pembina at the intersection of Ulster Street and Dalhousie Drive. It is in Fort Richmond. The property consists of a 2-story row house built in the late 80s. And there are 6 units, which are all 3 bedrooms, and there is surface parking available toward the side, as you can see from the photos. If you turn to page 14, we have our income approach overview. The NOI is not in dispute. On page 15, we have our cap rate for social housing discussion. That carries through to page 18. On page 19, we have our subject-specific cap rate. So we are disputing the cap rate of 4.4%. We also dispute the logic that properties with smaller suite count are going to be less risky. If anything, properties with low suite count will have a harder time maintaining market vacancy, and they have less units to spread their expenses over. So this idea that 4.4% is appropriate just because it's small, we reject that outright. I'm using a cap rate of 5.75%. Based on our cap rate study, good quality properties in good locations at this age group, we would start at 5.5%. And then looking at the exterior photographs and seeing that they've refaced the exterior and done some work there, just doing a modest adjustment of 0.25% to account for the construction type, social housing, but going less of a premium to acknowledge those features there with the exterior. So if you turn to page 21, we have our income and expense overview. So we're using an NOI of $33,411 with a 5.75% cap rate. We get a rounded value of $581,000. And that will conclude my presentation, but if I may just get a summation afterward, that would be great. Thank you.
Thank you. Questions, Ms. Tang?
I don't have questions.
Mr. Merritt?
Oh, thank you, Mr. Chairman.
Mr. Diamond?
And I have no questions either. Thank you very much.
Just on the cap rate, 1988 construction, so that's significantly newer than the properties we've heard previously. Do you still feel that 5.5 is a appropriate starting point for this property?
It is newer than the other properties that were built in the 70s. I definitely acknowledge that. But in terms of our base cap rates, they do just have wider ranges. So just with the nature of kind of having ranges and having cutoffs, some of the categories will be broader. I do still feel confident in the 5.5%, but I acknowledge that it is newer than the other properties.
Thank you. Okay. Ms. Tang, a desire for summation on this property or a summation in general from the properties we've heard today?
No, I'm fine, thanks.
Ms. Gates?
Yeah, I'll just do a brief summation. Thank you. So for the properties we've heard today, they're all social housing. They have no history of economic profit. In our view, social housing is different from market apartments. It's a distinct subset of the multifamily category, and it should be valued in a different way. When we look at how to value these things, we look at what the Appraisal Institute is saying, what prior board orders are saying, and there's an acknowledgement that lower end market rents with potentially higher vacancy, higher expenses still warrants a cap rate premium. In the case today, we have used lower end market rents, but our vacancy and expenses have been market rates. So the case for a cap rate premium makes sense for the properties that we've heard today. And we've adjusted those cap rate premiums based on the site specific factors, multiple buildings, construction type, etc. So I would just ask the board to take all that social housing cap rate information into review. Thank you.
Thank you. We'll conclude this matter. We have heard all the items that are scheduled, and this hearing is now adjourned. Thank you very much, everyone, for your participation today.
Thank you.
Thank you.